They say the trend is your friend, and I think this really is the case. When the market is trending, it is going to move farther in that trending direction, and it will tend to trend for a fairly long time. So taking trades against the trend become risky and not that profitable. Hi there, I'm Russ Horn, and what I'd like to do today is show you a few different ways to identify the trend. What direction is the market going, and what direction should you be trading to make the easiest, most profitable trades? Now, the first way to do this is to simply look at the charts and see if there is a direction that you can identify. In this case, we're looking at the upper left of the chart down to the lower right. So we can see that there is a very distinctive direction here. We are moving in a downward angle from the upper left to the lower right. And that's the direction we would want to trade. Every move that moves downwards is going to be bigger than every move that moves upwards on average. So this makes a sell trade much more desirable than a buy trade. In the opposite direction, we can see that in this section of the chart, the market is moving from the lower left to the upper right. So this makes buy trades in this section very desirable. The market is going to move further in a long direction than it will in a short direction. Now, when we get to a section of the chart that looks like this, there is really no trend to identify. So this is a market that I would want to stay away from until a trend develops. The next way to identify a trend, and this is one that institutions like banks and some funds use, is by putting on a moving average. Now, there's a couple of common ones. So we're going to start with the first one, and this is the 50 exponential moving average. If the price is above the 50 EMA, these institutions would like to trade long. If the price is below the 50 EMA, they would like to trade short. So this becomes the market bias. If the price is above the 50 EMA, long trades only, and below the 50 EMA, short trades only. Now, there is a slower version of this that is commonly used, and that is the 200 EMA. And again, the same rules apply. If the market is above the 200, long trades only. And if the price is below the 200, then short trades only. Another version of this is to use two moving averages, fairly lengthy moving averages. So let's do a couple here. We'll go moving average. This first one of my favorite ones is the 2155. So we'll go 21 EMA, color that one blue. And then we'll add a 55 EMA, color this one red. And when we have a cross down, the 21 crosses below the 55, then we have a short trend. The market wants to go down. It's a bearish market. So only short trades for that period of time. When the 21 crosses above the 55, then we're looking only for long trades. The next option we have is by using two exponential moving averages. So let's throw on a couple. My favorites are the 21 and the 55. So we'll put on a 55 exponential moving average to the close, and we'll put on a 21 exponential moving average also to the close. Color this one a little bit different. And what we have here is a weighted trend, basically. So we've got a fast moving average and a slow moving average. The smaller the number, the more the average will hug the charts. The slower the number, the further away that average will get away from the price action. When we have the 21 move below the 55, then we are in a downtrend. And from there on, we're only looking for short trades. When the 21 moves above the 55, we are only looking for long trades. And we can see clearly in these examples that the market movement downward is much longer or much greater than the market movements upward when the trend is down. When the trend is up, the market moves upwards in bigger leaps and bounds than it moves against the trend or downwards. Yet another way to do this is by looking at the swing highs and the swing lows of the market. So when we come to define a trend, the actual definition is progressively, in the case of a downtrend, progressively lower lows and progressively lower highs. So if I start marking off highs and lows on the chart, we'll start with a high, followed by a lower high, followed by a lower high, and so on. So we know at this point we are in a downtrend. We have the highs getting lower, and I should do this also for the lows. Start with the low, getting lower and lower. Put that one back. So we have all the requirements for a downtrend. We have progressively lower highs and progressively lower lows. Now, of course, there's going to be smaller, little tiny swing highs and lows that happen within that may be a little bit higher or lower. But the overall is we have these great big moves and they are progressively getting lower and lower. For an uptrend, it's the same thing. Progressively higher lows and higher highs. Start with a low, getting higher and higher and higher and higher. So we are getting higher and higher. We're making progressively higher lows and progressively higher highs. So all the requirements are there to meet an uptrend in this section of the market. And finally, we can use something like a MACD, an MACD indicator. It's a great momentum indicator, but it can also help you determine a trend. So let's put on the MACD. We'll go oscillator, MACD. Now this is the one that comes with the MT4 platform, 12, 26, and 9. Now this is the basic MACD, and these moving averages might be a little bit small, but we'll place this one on just so we can see. And what I'll do is color this a little bit different. So color, so make the silver blue and thicken them up a bit. All right. So the MACD that comes with the platform, what we're looking at is the histogram here, these blue lines. They're default as silver, but on a white background, they're difficult to see. So when we have the histogram or the MACD line itself, which is what in this case is the histogram, we are looking to see that we take only buy trades when the histogram is above what's called the zero level or the watermark. This flat line that the histogram emerges from is the zero level. And when the MACD histogram is below the zero level, then we're looking only for short trades. Now we can stretch this out a little bit. Let's go back to that 21 and 55. So if we have too many indicators on our chart, we can use the 21 and the 55 and see a really nice trending market upwards and a trending market downwards. So whenever we have the MACD below the zero line, we're looking for short trades only. When we have the MACD above the zero line, we're looking for long trades only. This is really going to help with your trading. You're going to find that you have fewer losers. And if they are losers, they're not going to be very big. And if you are a trader that likes to let your trades run to catch as much of that market movement as possible, trading with the trend is really the best way to do this because we already have a bias and we know the direction that the market really wants to go.